it's been pretty much bearish since obviously everybody knows since like January. So I'm looking forward to make another move down before it actually goes like bullish, or like starts a bullish trend or whatever. So currently right now in the market, the last correction move we had was this here. Like this blue line that I got marked out here, like that's the last correction. And then we got this impulse coming down back into the support. Now here is where most people go into the ideal of what is support hold, or what type of bounce should we be looking for, like once it gets to this type of support, or some people call them demand zones or whatever you want to call it. But overall, it's just a support and resistance, no matter how you're looking at it, no matter how you mark yours up or what you use. Like it's a heavy area that you can previously see in the past that the market's been doing a lot of trading at, like here, here, and here, and here, even here, and all this here. So all those are areas that the market's been either rejecting, breaking, or retesting. So my whole idea, since I showed you this like on the daily, let me zoom it back out. Like look at this overall pattern right here. Get rid of these. This would be what, I don't like use these type of patterns, but I think this would be what they call a flag, like this here. And you got the flag pattern going like that, right? But I don't like use my patterns like that. I use Elliott wave patterns. And so from my perspective of Elliott wave, what we have here is, I'm gonna draw it out for you because I already had it all marked up, but I wanted to like just do it while everybody was on here. Like from here, I'm expecting the market to pull up to this level here, maybe around like this 90 flat. See like this 90, let me move this green line right here. And the market basically use this as a resistance and continue the market down to push down into this 88.65 area. Which would continue making the market bearish, because every time we had a retracement, like every time we had an impulse and then we got a retracement, we got a rejection, we got another impulse. When the market moved back up into this zone, we got another impulse. So typically the simplest concept that I look at is just the market make a higher highs, higher lows, and lower lows and lower highs for a continuation of the trend. I more look to continue the trend rather than trying to catch the bottom of reversals, because like you don't want to get caught up in trying to like always plot out what a reversal is going to happen. You might as well just let the market like show you the data like this. If it's going to reverse from there, then once it gets to that area, you'll have some type of reaction. And then you'll be able to determine how you can react once the market shows you what it's going to do once it gets to a predetermined area that you have marked out already. No matter if that's support and resistance, or trend line, or whatever people use to plot their areas where they already see reversals, or where they plan in the market to stop and plot a consolidation for a continuation move up. So like for this area, like example here, like Friday, look at this close, like look how this candle right here closed off this support, like all the way up here or whatever. And then the next candle closed down all the way down here bearish. Now it's two things that can happen. Let's go down to the 4-hour chart so we can see it closer. Now it's two ways I'm looking at this, two possibilities. Either the market see how it's been coming down slow. Like ever since you had like this impulse down, you got this retracement, and then it's basically been doing this. Either the market can come up, like I said, and we get a pattern like this, and then we get a bigger move down, or we'll start some waves up right here. So this would be the area where we'll determine once it gets there how we'd be able to engage the market. So how would you engage the market when it actually gets there? Like that's what a lot of people like. We give signals and we give calls, but I be knowing people want to be know like when it actually get there, what should I be looking for? Like what should I be doing or what should I be waiting on? Um, it's not as easy as just telling people, hey, when it gets here, it can do this and do this, because that's the spot that I know I used to be lost at, and where I spent my whole last year practicing on how to engage when the market hits these areas of confluence and how we should intake the data and how we should like react to it. So what you would be looking for if we want to see a continued bearish move down, once it get there, this is what we'd be looking for. When the market pulls up and it gets to this area, we want to see an impulse, and then we want to see a correction like this, and then the market will pull down again. So you want to buy, you don't want to sell it until after this impulse is made and then a correction is made, then you want to sell it. You don't want to try to anticipate that the market will reach this area and just sell off. This is your most safest conservative way to enter the market. Um, Once you get there, you see the market rejects it, and then you see the market goes into a consolidation. And after that consolidation, on the retrace, that's where you want to enter. That's like one of the first things I learned from like Quillen Black, like no break, like no retest, no entry. But this is more like, you know, like in depth, like it's explanation of it. So this is exactly what I got drew on my chart. Is exactly what you would be waiting for to get your entry or to see the dollar making more sell moves down to the downside. Because as of right now, if you can see the pattern that it's been making, like I can draw, like watch this. It's like gonna blow your mind. Like right now, if you see the patterns that it's been making, it's been one, two, three, one, two, three, one, two, three. So here we expect show you exactly how to get up there. We expect to move like this, this, this. The same typical structure that's already been happening. Like one of the tricks I learned on TradingView is you go to like this thing called bars pattern. And if you look, if you draw it from, let me go back to it. If you draw it from here to here, you see how I give you that pattern? On a different fractal, this is the same pattern that's being made right now, just smaller. If you look at this pattern that's going on right now, like, cause remember the market's like very fractal. Um, Let me get a box. If you look at this whole pattern right here, boom. If you look at that whole pattern right here, like how I marked out this pattern, it's the same pattern being made. It's just on it's just a different size of pattern. You know, it's variable. It's varied. So the second thing that can happen, what I wouldn't be surprised if it happened, because we know the market likes to get everybody who has no percent of patience. See how this pattern, how it came down, you had a consolidation, and then it made that last move down, and then it went up. The same thing can be typically happening here. So we can even get a smaller move like this, like I was saying at first, to get that last move down before we actually get a bigger move up. So same thing. Don't this right here. I got a better confidence that something like this will happen, like more, because like you know I believe in the market likes to rate liquidity, like the market likes to take out stops before they like move in the opposite direction. Basically, we know it as a stop hunt, right? So this formation here is more actually likely to happen to me, like the market will come up, it'll find resistance here, define resistance here, and some double top formation up here. You got a lot of market like institutional flow, what I call, because you got the market, it rejected here, it rejected here, it broke, retested same support, it traded off here, there, it traded off here, there. You got a consolidation here, the market rejected down there. So that lets us know this is an area where the banks or the people who got the big money are actually placing a lot of orders, or they like taking advantage of buying and selling, getting out of sales, pitting more on and stuff like that. So that's how I look at it. So what I just shown you right there is what I'm most likely looking to see. I'm looking to see a move up, then a rejection to come take out this. You see how clean, like this is a key. You see how clean this double bottom is that's forming right here. Let me move all this. Like look how clean this is. Everybody typically, when the market moves here, you have to think like this. When the market moves here, there's people that was buying it. So their stop losses are going to be here. So the market goes up, entices, comes back down, take out those people, then it actually goes up to make its move. Because when it takes out all the people who anticipated that this is a double bottom, and it's going to continue up, and then they break this, and then just continue going higher. And most likely the stop hunt move will be an accelerated move. Like it'll do it like pretty fast, like compared to how long that this been consolidating. So that will give us that will give us what we call a flat, like a regular flat. In the Elliott wave world, we call these like regular flats. And that's what I'd be looking for right there. And then that's what I'd be looking for, that major sell-off. So we can capitalize on both, on like all of this, like, you know, depending on the person's patience and depending on how a person likes to go at the market. But me, like I would rather wait for to see this actually happen and then get to the resistance. And then once, like I said, once you get the rejection, you're waiting on a correction, and then you're looking to sell it down and take out these lows that was made here. And the market to continue down, right? Now, whatever you're looking at on the dollar should be the opposite on Euro USD. You should be able to put Euro USD and the DXY on the same chart, and they should look flipped upside down, like, you know, like a replica of each other or whatever. So that's why I start off with the dollar, and then I kind of see if the Euro USD matches up with my analysis that I have on the dollar. And obviously, we all know that the dollar's been bearish, and I do think it's going to be a bullish move. But for now, I'm going to like look to capitalize off the market, stop hunting, and making more continued moves down. So that's what I have on the dollar, like to make it like very, very, like just to make it truly simple. Um, and I'm going to show you how this will correlate, how it's the exact opposite. It's like the same pattern structure on Euro USD. And that's like one of the pairs, like one of the main pairs that I actually trade. So I'm gonna like finish, because I like took a lot of stuff off. So I'm gonna like actually put all the Elliott waves and everything on there for everybody, and I send like every markup I do to the group or post it on the Facebook or whatever. I just want to take it all off so I can give you the behind the scenes market structure, because I know a lot of people don't understand Elliott wave. So I just wanted to do it in the form of just simple support and resistance, and you know, support and resistance ideas. So like watch how with that analysis, now we got Euro USD, right? Let's go to the daily first. I like starting off on the daily, even though I already got it like marked up or whatever. Um, So if you look, the market's been in a I should already have horizontal lines up. The market's been between here and here. Like this is the range. That's the range since what is that? January. Yeah, since January, right? Like that's the range that you're getting out of the market, right? So the market had an impulse here and then a correction. A, B, C. That's the bigger correction, right? Another impulse, right? And now we're getting another correction. It's the same pattern, but it's just smaller. Same thing that happened over here. Boop, 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 boop. We have the same thing happening again. Here, 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 here. Now, my prediction for Euro USD, oh, let me put this in. All right, cool. But my prediction for Euro USD is that we'll have another correction and it potentially can come down like this, which would be the completion of this pattern here. And then like take out the stops before we actually get that extravagant move. So that'd be the same, exactly what I just showed you on dollar. That'd be the same break and correction that we'd be waiting for. So this pattern, 4 hour, will become more clear. Like, let me show you. So basically what I'm saying, what I'm looking for is since the market made this move here, you see it made 1, 2, 3 moves up. I won't be surprised that if the market comes here, here, and then here, and then it makes that move up, which, like I said, it'd be complete, be a completion of this bigger pattern. This is what this is plain out simply what I'm looking for in Euro USD. I'm looking for it to see low, 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 bigger move up. So when it gets down there, it's the same thing what I said on the dollar. All you'll be waiting for is an impulse move and a correction. That's it. You have your correction like this or whatever the case might be, and then the market will move up. And then this is where we should be buying at. Like you can add whatever you want. Like you can have your fibs pulled and then it comes down. You can target the 61.8 or whatever Fibonacci that you use. Like to use this confluence. You wait on your divergence and all the different technical things that people use. But overall, as long as you can recognize that the market moves in patterns and that the market moves in waves, you can know what to wait for. You can know what you should be most likely looking forward to seeing. And then when you see these big moves happening, like the market is always predetermined, like setting these moves up. So in the Euro USD, this is exactly what I'm looking for. It's the total. It's like the replicas opposite of DXY. And I would take this. It's like how Ryan say it's a midweek reversal. I would be looking for that to be like a midweek reversal because this is only, let's look at how many pips this is. And because you like the average daily range of Euro USD is around like 70 to 80 pips, right? That's the ADR of Euro USD. For those who don't know what average daily range is, it's just like, like the amount of pips that the pair have been moving for like the last 5 days, like the average amount from like high to low, from the high to the low, the daily high and the daily low, and it takes it and then like average those pips out, and that's how you get your ADR. They got like indicators that can like show you that a market up already for you, but that's basically like how you get it. And in ADR is helpful because it's like when you see those moves on certain pairs and they already went like 80 pips, if this pair has a ADR of like 120 pips, then you can kind of plot out your waves and see, oh, maybe like I'm more of like in a correction and I should get one more impulse move and that should be those 50, 60 pips. Versus like a lot of time, like Euro USD already moved like 80, 90, 100 pips or something. And then people still trying to chase the trade. when it already like basically went to its maximum. I'm not saying it never can go more, but we talking about what happens the majority of the time. And so that's like a real key. It's like, you know, the pair that you're trading is average daily range, because every pair has a different um dance to it. Like, you know, we see like GBP JPY is a lot more volatile than NZD USD is. So you have to be able to add that into your trading style and into your trading plan based on the currency that you're trading, like based on a market behavior. So with Euro USD, since I trade Euro USD a lot, I'm kind of like used to its market like behavior. That's why I stay to like the USD pairs. So a level that I can a level that we'd be looking for with this right here. I'm gonna have all this like more for people. I wouldn't mind seeing it get right here to this 1.618 extension, which would be, write it down so I can give it to you. It'd be 1.22, and we'll just round it off to 20, because like 20 is a 20s, 50s, the round numbers, the 80s. It's like another typical like style of quarter point. Like I know people, I use quarter point theory or whatever, and I use like these, I use the 20 level, the 50 level, the 80 level, and the full figure level to like base my trades off of. So right here, boom, right there. And as you can see, like the market, if you expand it out back, see the market traded, it had like nice support here, traded up out of there. Like, so you can see it's like been a previous area where a lot of big moves been happening off of. And like I said, then it'd be able to, the market makers would be able to complete their purpose, because you got, this is how I always think when I'm trading. I'm thinking like, where's the market now? And what was everything before? Prior to this move up here, there's people buying here. There's people buying here. There's people buying here. And now it's up here. So there's stop losses, stop losses, stop losses, stop losses, which we consider as liquidity. And every one of them highs are stop losses. That's why so many times you see the market literally come up and like literally make wicks like right at the same area that just barely penetrate, like maybe 2-3 pips. Like clear example here, like over here. Like the market just goes up, grabs, and then it pulls back down, like into the opposite direction. See the market here. Like let me erase this part. Like it's like, this ain't nothing we gotta like cherry pick. We just do it over and over. But like the market here, it moves up, comes back down, moves up. They come grab a liquidity from this whole area with this stop hunt. And as soon as they grab a liquidity, look, wick, we have an impulse, like back out of it. So that's how this is how I plot my trades based on what the market already did and what's most likely the way, if I was trading, if I was a market maker, like how would I be able to entice people to, you know, take their money or whatever. And that's the way that they do it. As the market was trading up, don't just look at it as, okay, it's been going in the uptrend. Think about it. That data that you see on the chart that's going up, there's people that was trading that people that was pushing that market up. Like it's people that was trading that market up. So you have to think about when you're in the trade yourself, what you do when you're in profit. You put your stop losses behind lows. You try to protect yourself. And you put your orders and like at the typical spot that you would think would be the safest, which would be here at the low or behind here if you're using a trailing stop. So just because you're not in the trade, you have to think that that stuff was still happening. And it's like millions, thousands of other people, thousands of other entities that was in this trade. So like I said, once the market gets down here, what we be waiting for is the move out impulse. Now, this breakout and correction, we'd be looking for like on a lower time frame, either 1 to 2 time frames lower. Typically doing like London or New York opening. Um, because like if you looking at the 4 hour chart or the daily chart and you anticipating that a pattern is forming, you want to go to the time frame that's lower than our one, like directly below that one, like a degree to lower, and you want to like confirm that pattern on that time frame because it's like it's fractal. Everything is fractal. So the same patterns that's being made on a higher time frame is going to be replica of those patterns made on the lower time frame. You can get more precise entries because you're doing a top down analysis. So that's the levels for Euro USD. Like I told you, we up here right now. I won't be surprised to see the market start declining and come all the way back down, grab this liquidity, and then make an extravagant move up. Let me go reset. Boom. Because at the end of the day, like another thing I want to point out real quick before I go to the next USD pair is because the rest of them really gonna be typically the same as Euro USD, so it like ain't really no big variance. Um, if you look at how the market is moving, like this, impulse, boom, 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 boom. That's your typical head and shoulder pattern, and then you got like this kind of slope. So this is what we consider as a bigger sideways correction, because this move here will be what I call the impulse. And this whole bigger move is just a correction. So the move up will be at least, we can just mark that right there. But the move up, at least, this is how I get my targets. This is how we get our targets. You take your Fibonacci's and you see this move up, and then you see this correction that's happening right now. You would take your Fibonacci's, or I do mine like this, but I know people use, it's just a backwards extensions. And you will look for the market to at least touch. These would be your target areas. Here. And look what's right above here. Liquidity. Right there. So the market comes up, comes all the way up. It won't just go up like that. Obviously, we know. It takes that, and then we get what? Some type of correction. Maybe a double top, or it can be a various of different patterns. But then we get another correction. So then the market starts looking like this. Correction, see, look, impulse, correction, impulse, correction, impulse. Now you're starting to see the patterns more. So we're gonna leave that zone up there because I'm gonna leave that up for the markup that I send, because that'd be like, each one of these would be good profit taking areas or whatever. But the whole concept is, what I'm looking at is that you can see that the market's been in like a sideways trend, like ever since the beginning of January, like ever since January 17th, typically. Yeah, like January 17th. So now we got our first impulse. We got 1, 2, 3. This is our second impulse. Then we got 1, 2, 3. Impulse, 1, 2, 3. And then we're gonna get 1, 2, 3, 1, 2, 3, 1, 2, 3, and then just keep moving up, like in that typical fashion right there. And that'll complete what a lot of people love to trade. I don't know if y'all see it, but that'd be like it's a head, it's a double left shoulder, and then you'll have a right shoulder right here, like at this spot right here. That'd be a right shoulder, and then the market will continue moving up. So that's an inverted head and shoulder pattern. So that'd be the next markup. So you got my idea on Euro USD, and as far as the dollar, whatever, like the opposite that I see the dollar doing. So now this next pair is quite interesting. This USD CHF. Um, no, actually, we don't need. I don't even like trading USD CHF. USD CAD is way more interesting because, like, I think USD CAD is would be the first setup that we'll see. Like this setup is more closer to like just doing what it's doing right now. So this probably be one that I'd be like trading like early in the week. Hold on. Okay, there we go. Let me give you the bigger picture. All right, so since over here, right, this is what I sent, like we was actually on this trade, like me and Divine, we was talking about this trade like a couple of weeks ago, like when the market was doing all this up, dropping, and we was talking about how that big pattern came down and all the corrections and continuations. So it's the same thing. Like, check this out. If I can give you a bigger picture of what I'm looking at. So from here, I see the market made a move up 1, 2, 3, 4, and this was the completion of the uptrend, right? So now we got this big impulse down, and then we got this long, extravagant sideways correction, which it looks difficult. It looks difficult to understand, but it's not like this is what people run away from, but it's not difficult to understand. It's just as simple as this. And then you will see how this predicts like the next like drops, how the drops are going. Right here you have what I call a triple combo. You have 0 W. Oops, I did that wrong, my bad. You got W, X, Y, X, W, Z, right? No, I don't need another one, fool. X, Y, X, Z completion. Let me change the color this so you can like see it better. What's a good color? Yellow. Nah. Okay, there we go. Okay, so like look at the overall, like, cause it's like typically making a smaller one. Like this big one that we got going on right here, I'm gonna show you how it's like making a smaller version. Like it's like a very version of it that's happening right now. So this typical move right here, you got 3 waves. You got 1, 2, 3. That's the first completion. Then you got a retracement wave. 1, 2, 3, retracement wave. 1, 2, 3. That's a completion of what we call an Elliott wave combo, a triple combo. Basically, it's a combination of corrective structures, and they're combined all together and separated by impulse waves, which is the X legs that you see. You see, you got the move. The overall move is just as simple as this, 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 and this. But inside that, you can see you got 3 ways to make the W, 3 ways to make the X, 3 ways to make the Y, 3 ways to make the next X, and 3 ways to make the completion of the Z, right? So in the overall picture, this market is correcting. We in a big correction. This whole move we had up here, this whole move we had up, the market is correcting that move right now. So that's why you see I got the A leg down. This is the B correction. Now we're working on the C. So it brings us to present time. So we have 5 waves down, 1, 2, 3, 4, 5, and it put us into another the correction that we're currently in. So now I can give you how I think the market is going to play out from here. So same situation. After this impulse down, this is the 5 ways completed. 5 ways down, just like we have 5 ways up over here. 1, 2, 3, 4, 5. Now we in the A, B, C correction, right? The A is a nice impulse. Let me zoom in a little bit more. Completion of the 5th wave. It's the end of the trend. We got 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3, 4, 5. And now I just want to try to keep up with the pattern. So now I'm predicting that the market is going to push down and continue this trend. Now, it's two ways that this can happen. If the market starts to move down, let me get this green line out of here so it won't confuse nobody. If the market starts to move down from here, we obviously know our targets to be here, this low, and this low, because that's where all the liquidity is at. So we always see the market comes down, it spikes, corrects, spikes, corrects, spikes, and then it moves like that. I know that looks very familiar to everybody, but the reason why I consider that it does that is because of what I explained earlier about the liquidity. I think like what people stop losses and orders are is like targets, because that's where they can go collect their money. That's where they can make people lose money. So they go raid these areas to get people out of trades, to cause panic, to like get people not being able to make rational decisions. And then they move the market in the opposite direction, which is a correction. And then people change their mind again. It's like all psychological and like based off how you react to when the market is like moving fast pace, or when you don't understand the market or what it's doing certain things. So from here, we can get a move down here, and then it kind of like gives us a trend line bounce and comes up and makes an E and then makes a bigger move down. Or we can get this here, because we see both of these ways happen every time. We can get a move down, we can get a correction like this, and then a continuation down. And what that'll do for me, and the reason why I want to see that happen, is because this would be considered a triangle pattern for me. It'd be, you see how you got A, show you what I'm saying. It'd be what we call a running one. See how you got 1, 2, 3 moves up, 1, 2, 3 moves down, 1, 2, 3, 1, 2, 3, 1, 2, 3, and then boom, and then we go down. So what that'll do is, or we can have that, and then we get like a correction up here for like a stop hunt, and then we get the market down. Like we get a completion of like that type pattern, this big old pattern we see here. Like look how long this been moving sideways. Like it's crazy because like people don't even be realizing, like from here all the way to here, this started on September 11th. Wow, that's a hell of a day. Yeah, that's when the Twin Towers happened. Okay, this reversal started on September 11th for some weird reason. But since September 11th, we had it's been moving in more of like a sideways longer correction or whatever. So I wouldn't not bet that the market kinds of use these areas to continue bouncing off of before it actually makes this major move down. And either of these are good. It's more about, like I told you, the trick to figuring out what you really want to do is having different scenarios plotted out. And then once those scenarios start folding out, you being able to have an approach to the market where you can show patience and wait for certain patterns that you've been growing to see and be able to utilize those patterns. Like right here, we have what I do is once it gets up to this area, like the market trades down, same as the market's trading up, it's trading up, it's trading up, and we get here. Like I got a few different reasons why the market can reverse here. So what I want to see is I want to see the market hits, make a rejection, and then I'm looking to capitalize off any type of correction here for a continued sell move down. And that's where the patience comes in at. Like that's where the patience comes in at. Like if you don't learn how to have patience in this game, like I learned the hard way, like the very, very hard way, like 10, 15K type hard way. You like won't get what you're looking for, like period, like in the market, because like they don't like show mercy. Like none of the markets just don't show mercy. So you have to have your approach ready of what you're doing in the market. So currently right now, the move that I'm anticipating that it can make, like as far as why I said I might typically be trading this pretty early and why I think that E would be dope is here, here, and then here, and then we just get a move down. Like I wouldn't be like, that's what I'd be betting on. If I see that actually happening, like that can happen. Or if we get this move right here, 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 and then we get a move down. Now, how will we capitalize on that? Or how will we determine if the market is going to continue moving up or if the market going to reverse right here? This is the hour chart now. We're going to determine that with patience. If the market gets here, it trades up here, and then we get a move down, and then we get a correction, and we're going to sell it. We're going to sell it. If the market breaks here, and then we get a correction, we're going to buy it up to this level here. And then we're going to see what the market does at that level, which would be the completion of that bigger pattern that we had on the 4-hour chart, which would complete this pattern up there. So it's all about patience. It's all about just having patience and knowing the different scenarios of what can happen. Because like sometimes we have our minds so fixed on one thing that we miss like different pictures that can actually take place. And we like, oh, like fuck USD CAD, like what the USD CAD on, like this is doing this, and every other pair is moving with the US dollar besides the USD CAD. Like this is why it happens, because they move pairs by levels, and sometimes they might hold the GBP to let the Euro USD do a stop hunt, and then later they catch the Great Britain pound up, and at that same time they could be consolidating the dollar. So that's the confusing part when people talk about fractional disparity, when they talk about pairs moving together, or they talk about how the dollar moves inverse to the Great British pound and the euro. Like people expect it to happen all at the same time. You have to recognize what level each pair and each currency is in. All of them have their levels. So like the last pair that I'm gonna go over before I give it to Devon, because he's gonna go over a couple of pairs too, is USD. Yeah, we can do that. USD CHF. So I'm gonna have I like send all the levels, like the Pacific levels and Pacific like markups and stuff like that on each pair that I went over. Now USD CHF is interesting. The reason why that's interesting is because I want to take you to a higher time frame, because all the CHFs been bullish like recently, as we can see. So this is why I'm at with this. Because I'm looking at it two different ways. Let me erase this and just, if I can just draw it out fresh so everybody can be on the same page. Because I can already see the fuckery that's going on. or USDCHF. Okay, now check this out. Um, Let me do this first. I want to reset. Okay, we had this big decline in the USDCHF. Like we've been obviously since the dollar been declining, you know, it is what it is. But we've been having this decline in the dollar. So now we hit this point to where we got a nice bullish move. We took out make it. So we took out here. Give me 2 seconds, 2 seconds, 2 seconds. All right, so here it's level here, right here, right? We had the market trade. We had the market trade up. Break the resistance, and now it's used as support. Resistance turned to support, right? And then we got another move to the upside, right? Boom. Now we're into another resistance because this is a consolidation. Like this is a consolidation over here, like this area over here. But I told you I got like a certain things that I use in my analysis, and I use something called order blocks. You know, it is basically a candle, like the opposite candle before the move actual happened down. That's where I anticipate that the most volume and the most trading and everything took place. So it's a own resistance of itself. So now you got a range. So now you have a range, and the range is between here, between this level, and we already got a line right there. That blue line right there, with a blue box. So now you got a range. Okay, cool. So now you got a range right there. And that range is 150 pips. So that's 150 pip range. So for USDCHF, that's not one of the pairs that like just go real crazy, whatever. So it's like 100 and some pips is like the norm for like USDCHF. And as you can see, it's been making like higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So this is also, I don't, obviously just don't look at it as higher highs and higher lows. With me trading waves, it's a wave pattern to me. So what we got here is, this is what I see. I see you got your first impulse up. I don't know why it's gray. So you got your first impulse up, 2, 3. What does it be? 5, 3. Because I look at this as an extended. Got those backwards. That's a horrible color. All right, so you got your first impulse up, pull back, and I look at this as extended like 3. So if you go down to the smaller time frames, you'll be able to see what I'm talking about. But for now, this is like an ending move, right? So we get a retracement back down. We already rejected here once. We trade from here this time. We traded from here. We broke it, we retested, and now we're retesting the same zone. The zone that's been tested and traded off of many times. So now that we got that in mind, and we have in mind what we see the dollar doing, and we have in mind that the CHF been bullish, let me show you what I anticipate that USD CHF would do. So from the price action, well, what price action shows me, go back to my pen or my brush. I anticipate that this pair, after this move it made like this here and here, I anticipate that we get a move here, back up to here, a bigger move down, and then up. Now, every time we look at something, we want to make like two scenarios because we don't want to just be like kind of next to like what else can happen. Like, but we go with our highest probability and then we make like a secondary like analysis or whatever. Now, the reason why I say this is because, like the same concept or whatever. When I see the market, like when I see the market trade here, right? And then the market hits that was the break and it's the retest, right? So then the market pulls back up. Like this is an impulse. This is an impulse. You got 1, 2, 3, 4, 5. See, it's even a smaller one. That's what I was saying. Like you can see it when I go to the smaller time frame. Remember, like I was telling you, that's just a extended move, right? So you got 1, 2, 3, 4, 5. Completion of this right here. So I'm looking at this as a correction, meaning that the market already made the A leg down. So the market will come up here. It can be even 61.8, but I think it'll like retest the high, come back down, sweep the lows, come back up here. Just basically keep doing this type of ordeal. Like I'm anticipating this to be a long sideways correction, like from this spot here, before it actually breaks out to the upside, like or the downside. So currently right now, what we'd be looking to do, or we'd be waiting for it to like take advantage of this. Before I tell you what we look for, let me give you the perspective on the other side. So the perspective on the other side is we have this move down, we got this impulse. Let me get rid of this arrow so I can give you the perspective on if it goes down or whatever, like kind of what you'll be looking for on the opposite. So 1, 2, 3, we got this impulse here, A, B. So if we get a completion of this pattern and then it actually breaks, like this would be like a correction or whatever, and then we get something like this and then it breaks, we'd be waiting on another correction to sell it lower. You get what I'm saying? And that'd be, like I said, that'd be back to the patience part. What I usually do when I'm looking at stuff like this, I'll come out here, I expect I use this like as a zone. That's obviously, it lines up with a lot of stuff that you see like with harmonic patterns. I'm not really like on harmonics and stuff, like, but like, like Gartley patterns, deep crab patterns, whatever, like that people use with harmonics. But on a market structure sense, that's what you would be looking for before you sell it. Like right now, selling it right now would be you jumping the gun, because it's like you're selling at support. You get what I'm saying? Hold on, let me get my charge. 1 second. I got girls that's all natural, too. Unplug this TV. Which one is the television? Hold on, let me plug this up. All right, there we go. Yeah, so you basically be selling a support, right? You selling that support, and you wonder why, even if it was to make a move, if we had like a move like this, then a move down, and then like a stop like this to complete this pattern, then you wonder why like you obviously like stopped out of lives, because like we be selling and looking to sell and move at the wrong times. And that's where the patient thing comes right back in at. We have to like be able to recognize what previously happened in the market, like seeing all these moves that was like when the market traded here, it rated this high, rejected, broke this high, retested, moved up, took out this high. So it's naturally making higher highs, higher low, higher high, higher low, higher high. So there's no reason to say that it can't make a move down like this and retest that high and then retrace and then move up. So that's what you have to like be willing to pay attention to, because if you look at what happened previously in the market here, if you look at what happened previously in the market here, the market got down here, like this was the low, right? Then the market retraced and then it traded down and broke this low. It took the liquidity. Right when it took out this low, it traded all the way back up. It like literally like boomeranged. Like it took out the low, traded below it, maybe like, what is that? Like this is the same thing I look for every time. But it traded below, this low was 0.9293. It traded 30 something pips below this low for about a span of like 12 hours. Like it's 12 hours is below this low, then it took off immediately the other way. Traded back into resistance, came back out, took out this low. As soon as it took out this low, 4, 8, 12, 16, maybe about like a little bit, about maybe 20 hours, immediately traded the other way. Like, so you start to see, like when the market, look, this high right here, the market takes out this high, it immediately reverts back the other way. The market takes out this high, it immediately reverts back the other way. The market takes out this high, it immediately reverses. The market takes out this high, it reverses. The market takes out this high, it reverses. Like they whole objective is to grab liquidity and move the market in the opposite direction. Stop hunt people, get people hyped, get people chasing the sell, get people chasing the buy, and turn the market in the other direction, make a bigger correction, and then reverse it again. So that's where I mean by waiting on a correction, waiting on an impulse and then a correction, because then you don't have to worry about getting caught up in different things like that. Because like right now, if this market was like, I literally just because of how slow that it's moving down, like check this, like this is key to look at, right? So after this big move down, just from how slow that it's actually curving down right here, I would not be, that's why I'm like not going to be surprised if we get like do, and then we have a move up, and then we could potentially do that or do that. Or like I said, we could have a big move down, and then we get another correction, and then another move down, which would be like A, B, C. Like what should be like the correction move, the ABC move. And then you have like your waves within that, like this, that you would be able to capitalize off of. Like it's all fractal, man. It's like really all fractal. And you don't have to worry about like missing a move. Like when the pair already takes off, but when you see it already accelerating, all you have to do is anticipate what the next correction is going to be at. Like that's all you have to do. And it like makes it so much easier rather than like chasing trades, like trying to chase trades, like gets you caught up like every single time, like you're going to get caught up, like trying to chase trades. So like here, like the market broke up, like, okay, I missed this. It traded down, traded up. See, here's your entry right here. That impulse up. You see this little move right here? Let me show you. After it breaks, this confirms that, you know, we gotta move up a B, a C, which would be like a failed zigzag for me. That's what we call it in my patterns. So now what confirms that? You have a, let me mark it out with a box. You got a resistance here. You got a resistance there, right? This resistance was broken. which, you know, was broken off this bigger pattern because we already was expecting three waves and then a move up, right? So once this resistance is broken, we're looking for a correction. So we're looking for a correction to enter off of. Now, if we took that's on March 7th, let's go down to the hour chart so we can like see that correction better. March 7th, March 7th, March 7th, March 7th. See, look how much clearer that looks. Like, look, this is a whole correction. Like, look at this. This is like, it's like we never have to rush, like, or we never like got to miss nothing. But this is a whole correction right here. Right here. Boom. So what are we waiting on? We waiting on we're going to see move here, see the move here, and a C, and then we take it up. Like then we buy it. Like you're looking to buy off this pullback. And that's off the 4-hour chart, just breaking it down to the 1-hour chart. You're looking for what I've been doing the whole webinar. 1, 2, 3. This is a zigzag pattern. And then boom, you get your move up. Even after it breaks out of this, even after it breaks out of this, even after it breaks out of here, and it breaks this resistance, and it breaks this resistance here, you get a whole nother reversal pattern. It's an extended pattern. It's the same thing. Boom, 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 boom. It's the same thing. You get a whole nother reversal pattern. So it's like it's never like, don't never feel like rushed to like have to like feel like you're missing the trade. When I told you what I simply do to kind of like gauge where like these patterns or consolidation should be taking place in the market, I use my Fibonacci extensions. So from here to where the beginning of the move was at, which would be here, right here on point, you get, look, you get a consolidation at the 1272, a pullback, move up to the 1618, pull back, move up to the 272, and then we get a reversal. It's like a deep pattern, deep crab pattern or something like that. So that's how I anticipate to where these reversals can potentially happen at, like just using my Fibonacci extension and pulling it from the previous weight or leg down or whatever, and to project it into the future of these potential areas where the market can reverse or have a typical consolidation, which is the 1272 extension. I use the 1414 extension, and I use the 1618 extension. And then I do the same thing, like doubling up into the twos, like 272, 268. And then I really don't like go too much further than that because I don't like have the patience for position trading and shit. I hold it for a couple of days and I'm good. But like, yeah, so that's basically how I approach the market and what I really want everybody to start implementing to their trading. Like, get out of the mindset that, and if you read that book that Zachary shared in the group, like that mindset thing, like it talks about like get out of the mindset that you always have to chase something or you always missing something. Like all you have to do is wait. Like literally, all you have to do is wait. Like it's hours and hours and hours before this pattern completes. All you got to do is wait. All you got to do is literally be patient. Like if you don't get the move when the train takes off, do not chase the move. Don't try to buy after this bullish candle. None of that. Like you want to buy. This is the breakout wave, right? You either want to buy it at the beginning, a correction at the middle, or the end. And this is an end correction for a continuation move up. So I'm gonna mark up every pair that I went up over like real detail, like without all my lines and stuff, just to show y'all the entries, take profits, the reversal zones, the what if this happened and what if that happens. And then I'll post those charts in the group and on the Facebook, and you'll be able to have like some specific areas to look at where the market could potentially do a thing at. So from here, I don't know. I'm pretty sure that Devin probably got a couple of the same pairs that I've marked up. So I'm gonna turn it over to him. And if you got any questions, I'm gonna like be in the group heavy, like from now on. You can ask me, you can ask Devin, you can ask Zach, you can ask Jordan or anybody else that's want to step up and help out because it's all about helping each other. You know, anybody want to step up, answer questions, ask questions. Like it's pretty much open for the group to help everybody. But specifically, if you want to like ask some trading questions about what you think a pair, you want me to mark up a pair for you, hit my inbox. I'll give you my ideas on it, or I like give you some of my mentor ideas that he has on pairs and stuff. Because every markup that I make, I like kind of like run it by like my mentor or whatever to kind of get like an idea from a couple other people. So from here, I'm gonna see how I can turn this over to Devin. Oh yeah, I can stop sharing. And I'm pretty sure he can share from here.
Nope. What's up?
Yeah, it's only we ready to watch you work now, bro.
Ooh, plugging my